hello and welcome to our Minds and Money 5 at 5 show, which this week is sponsored by Cerrado Gold, a mid-tier producer with assets in South America, Voyager Metals, an exciting iron ore opportunity, and Ascendant Resources, focused on the exploration and development of the highly prospective Lagoa Salgada VMS project, and is also brought to you in association with Resource Global Network. For those of you who don't know, we started the first 5 at 5 guests at 5 p.m. back in April of last year. We're now on episode 98. A few admin announcements before we start. You can go and submit questions by asking them in the chat function, which is at the bottom of your screen. You can also wave your hands and we can then invite you to ask your questions to the panelists live. We'll also be having polling questions throughout the webinar where you can go and vote. And for today's show, we have a great lineup of guests. They are Peter O'Malley, CEO of Kenosis Capital, a leading merchant advisory firm; Florian Grummes, CEO, Midas Touch Consulting, independent financial analyst, advisor, consultant, trader, and investor; Cliff Hale-Sanders, CEO of Voyager Metals; and Mark Brennan, CEO and co-chairman of Cerrado Gold and executive chairman and founder of Ascendant Resources. Mark, I briefly introduced the three mining companies earlier, but some of our audience may not be aware of is their common ownership. Can you give us an overview as to how the management of all three companies is interlinked?
Sure. Thank you, Andrew, and good afternoon, everybody. Yeah, basically what happened is we started as a group with Ascendant Resources in 2017. And this is a group that had worked together closely for the better part of 20 years. We developed the Largo Maracas project. We developed a number of other projects. And we had a very strong affinity. And what we wanted to do is go ahead and look at development projects and growth projects that we could look to grow. Now, we were looking at world-class projects, projects that qualified as very, very strong and large projects. And for that, we needed a first-class team. And what we've been able to do is very successfully find one Ascendant Lagoa Salgada, a very highly prospective VMS project in Portugal. In Cerrado, we found the Monte de Carmo and the Minera Don Nicolas projects, which I'll talk to you a little bit about. And with Voyager, we obviously have the Mansane, Monte Mansone property. So from that perspective, we as a team, we can very well bring all our skill sets together to grow these assets together and share the costs and the burden of the cost, which makes it very much less capital intensive than if they're all individual companies.
Mm-hmm. And how much skin does management have in the game?
Well, I think management's got a significant amount of skin in the game. It ranges, I guess, from management and directors of Cerrado probably have between 35 to 40% of the company. In the case of Voyager, probably management directors and very close friends are probably around that 35, 40% again. In Ascendant, management and directors probably have about 10%. So, the fact is that we all have a material element of our wealth tied up to the success of these three companies.
Okay, thank you very much for that. I think that probably leads into our first polling question, which hopefully is coming up on the screen now. Hopefully people can go and see that. The gold market in 2021, if we had to describe it in one word, what word would you use? Florian, whilst our audience is voting, how would you have voted? And has the gold market in 2021 turned out as you would have expected?
Yeah, that's a good question. I think it would be probably somewhere between average and disappointing. Mm-hmm. I turned bearish on gold in August 2020, then bullish again in November 2020, and in January, when we had this first really strong sell-off this year, I realized that something is still wrong in the gold market. And actually, until September, end of September, just recently, gold remained under pressure. In the big scheme of things, I hope you can see my screen. Gold has been building up, probably a cup over 9 years between 2011 and 2020. And we are right now in the making of the handle. And probably you as a British can answer it better than me, but I assume the symmetry of the handle, if it would finish right now, is not really what a cup and handle should look like. So usually the handle should be probably 1/4 or 1/3 of the cup. So maybe it will still take some more time in the gold market. The most important thing, obviously, is the resistance around, I guess, 1965. Gold needs to break through that resistance. Once it does, I think we are off the races, and we're going to see a very strong rally over the next, probably 2-3 years. The question is, when will it happen? We have a nice buy signal on the monthly chart now. If we zoom in, you can see if you calculate the depth of this cup that was in the making for 9 years, and at some point we will see this breakout, you can probably assume that gold will then go to $3,500 over the next few years. So that's basically the big picture analysis. However, as I showed before in the chart, I think we will have to be a little bit more patient until this handle is actually done. So I assume somehow more sideways kind of trading. But of course, if gold remains strong and breaks through the 1965, that's basically the signal that tells us, okay, this correction that started in August 2020 is over.
Mm-hmm. And bringing in Peter, what kind of, in your mind, were the key sort of like themes that drove the gold market in 2021? And I guess the follow-up question is, what key themes do you expect to be driving the gold market in 2022?
So I would agree with Florian's assessment. There was a reasonably disappointing the sector last year. We remain reasonably bullish. We haven't been traditionally gold perma bulls. We think the macro is we're in a new paradigm, and it's really, we think it's driven by the debt loads around the OECD countries around the world. They're all in this debt trap effectively. Very hard to raise rates. Clearly, as there are inflation pressures, I think there's going to be a discussion on a go-forward basis. Is Bitcoin a store of value? We have a very strong view that it's not. There's going to be people needing to move into a store of value when there's going to be currency devaluation and debt issues globally, and therefore we've become quite bullish on gold. Love to hear Florian say $3,500 next year. We're kind of the same view.
Not sure if it's next year, but let's say over the next 2 to 3 years, I think.
We'll take 2 to 3.
Just as a sort of like another question to ask you, Sir Peter, what do you think will happen in 2022 in terms of gold M&A?
Well, I think the sector, very broadly speaking, is undervalued, and certainly undervalued to where we see things trading in the stock market. Now, I don't think you're going to find a lot of people who are playing the FANG type of stocks, with my inverted commas, be moving into gold. I don't think that's going to happen, but you're going to see more the mutual fund crowd and the retail investors who are, by and large, I think the Johnny Q public on the street is a reasonable fella or gal, and they see what I just said, that there's debt overhang, there's debt issues in many, many countries around the world, and golly, we should have a little bit more gold in our portfolio. So I think that buying will begin to grow over the next year or so as the handle on Florian's cup comes into focus.
Mm-hmm. And back to yourself, Florian, in terms of if you're advising your clients how to play the gold market, when it comes to gold mining stocks, are you advising them to look more at sort of junior exploration companies, more at seniors, or more at royalty companies, or just buying gold bullion, or something else?
That's, I think, already a very individual question. Generally, I always advise, first of all, have the physical gold preferably in your own hands and avoid leverage, especially in an environment that we are in right now. So once we get this breakout above this 1965, and then maybe we get one last pullback to this breakout level, then we can talk about a really established new bullish trend, and then you can do other things. But in this environment where we are right now, I would be a little bit more careful. So don't do any leverage bets, keep it physically, and focus on the really good companies, especially the big ones. They all had great cash flow over the last year at those high gold prices. I mean, they're all basically swimming in money, more or less. They can do, I think, a lot of M&A down the road, and next year especially we're going to see much more. And And the juniors and the explorers, and especially the very small explorers, I think you still want to be a little bit cautious. Their time will come, but it's probably too early in the cycle. So usually you see them catching up in a later stage of a bull cycle. So I would be a little bit cautious with them. But the bigger companies, the senior producers, for sure.
Okay, well, thank you very much for that. I think if I can just get the polling up, I think disappointing, unfortunately, was the most popular answer. But let's hope we can have a more sort of like better 2022 with gold going up to 3,500. That brings us on nicely to our first mining update, who we heard briefly from earlier, Mark Brennan, CEO and co-chairman of Cerrado Gold. Whilst he's sharing his slides on the screen, let me briefly give you his background. He's Cerrado Gold CEO and co-chairman. He's founding partner, executive chairman of Ascendant Resources, and executive chairman of Vanadium One Iron, which is recently renamed to Voyager Metals, as we'll be hearing more about later. He has more than 30 years of financial and operating experience in Americas and Europe. I would love you to go and give you your update, Mark.
Thank you, thank you very much, ladies and gentlemen, for joining me today. Very quickly, the mantra for Cerrado is that we intend to be the next mid-tier gold producer, producing approximately 250,000 ounces by the end of 2024. And that recently has been taken over by the fact that we anticipate we will be the lowest cost producer of gold in the world out of our project at Monte do Carmo in Brazil, which is fairly a significant attribute to have. But we currently have about 50,000 ounces of production coming each year out of a new acquisition we made in March of 2020 in Minera Don Nicolas in Argentina. We're located on the Desierto Massif, a very prolific gold belt. We bought this project with a base case scenario of 8 to 9 years of 50,000 ounce per year production, looking at about $1,000 all-in cost. So based on $1,800 gold, our anticipation is we'll generate 30 to 35 million of free cash per year. It's taken a little while as a consequence of COVID, but we're now very comfortable with that. As of the end of the third quarter of this year, we've moved away from our restructuring of those operations now very much into the normalized operations. We are going to add another 25,000 ounces per year of heap leach material coming at the end of the second quarter of next year, which should give us another 25,000 ounces or so on an annualized basis. And that'll take us up to somewhere in the region of 40 to 50 million of free cash. So we're looking at a very strong cash flow driven machine in Argentina, while at the same point looking at tremendous growth opportunity from exploration and development of the properties we have there, of the different satellite areas that we have there. In Brazil, we started the company in 2018 based on the Monte do Carmo project in Brazil. It's a big district, about 60,000 hectares, which we own control, great mining jurisdiction. You're not in the jungle. It's very strongly supported by the local community. And this gold mine, we anticipate coming into production in late 24, early 25, and we're looking at 150,000 ounces for the first 5 years of production, with a cost of less than $431 per ounce. That would make it clearly the lowest cost producer of gold in the world. And our expectation is that we currently have a CapEx of about 125 million, which includes a 25 million contingency. So we feel very comfortable that we'll bring this asset on. We acquired this asset from two geologists who were the discoverers of the Volta Grande project held by Belo Sun right now, the largest undeveloped gold deposit in Brazil. We expect this deposit, this project will drive 5 million ounces as we move forward. So from that perspective, like the other project we have at Minera Don Nicolas, this is a discovery asset and still very much in the discovery phase, but we're looking to drive the economics and drive cash flow, which will help us to push the operation. So, by the end of 2025, which will be our first full year of combined production, I could easily see this company producing, 250 million of free cash at the $1,800 gold level. And if Florian and Peter, I'll take a quarter of their projected upside, and I'd be very, very happy. So, we have two very outstanding assets that I think are going to do us very, very well.
Okay, thank you very, very much for that. I'm going to kick off with a question. I think that obviously you mentioned you had Q3 record production results. What was behind that? Was it technology innovation? Was it processing efficiency? Was it management? Or was it something else?
I think it was, basically the net result was good mining practice. And what we did is we acquired an asset with that it had $125 million spent on it. The infrastructure was good. The resources were moderately good. But what we've done is we've actually, through our mining practices, we've taken a mine that was producing at 900 tons per day when we acquired it. Now it's producing at 1,200 tons per day. We've moved recoveries from 88% to 92%. And most importantly, the grade that we're actually mining now and through grade control is actually gone from 2% now to 2 grams per ton up to 4.5 grams per ton. So the combined element of the three aspects has really driven that turnaround in the cash flows. But really just very strong mining practices, aided and abetted by technology and bringing in our own improvisations.
Okay, thank you very much for that. Perhaps I can bring in Peter of Kenosis Capital. What questions do you have for Mark?
Yeah, so Mark, obviously you like Brazil. That's a penetrating glimpse into the obvious because you're there. But we sometimes find, well, you clearly like it. We're wary of Brazil, wary about tax, some opacity around the government. How did you get comfortable with Brazil and the regimes and the governments? Very broad question.
Yeah, sure. My father was the president of the Royal Bank of Canada when I was a kid in Brazil. And so I spent some time in Brazil as a kid, and coincidentally went back to the mining sector in the early 2000s when I was part of the team that developed and built the Desert Sun mine for the Jacobina mine, which we sold to Yamana for $700 million. The reality is that I find that Brazil, for me, has been a fantastic jurisdiction. After Desert Sun, we built the Largo Maracás mine. So we've developed probably assets that now have combined, valuations at any one time of, $1 billion, $2 billion. And I've never had a problem operating in Brazil. The regime, in terms of the we've very rarely had federal interference. If anything, we were aided by the BNDES to build a vanadium mine in Brazil. And the reality is that we've always worked in communities that have wanted the mines, and that's extremely important. As long as you get the local communities behind, as long as you're a responsible group. And again, our group has been working together for 20 years since we started the Desert Sun project. The reality is that you generally can make things work. I think it's very true of any jurisdiction that if you can't get the local communities behind you, the reality is that you're not going to have a strong likelihood of success. And I will point out, that operating in Quebec, operating in British Columbia, in Canada, that are well-known mining jurisdictions, are often more complicated than actually operating in Brazil.
Well, I will say we get approached by folks wanting us to look at investments in Brazil. We were approached this morning about a rare earth play in Brazil, which we'll look at. We don't think we're afraid of risk. We've done transactions and investments and helped folks out in the last few years in Angola, South Africa, Sri Lanka. We stayed away from purposely California, Stan, because we don't think we can understand what goes on there. But maybe offline we'll chat with you about Brazil because it's very intriguing to us. But we're aware.
I think the federal government have always been very supportive of mining, and actually mining is very, very cheap in Brazil right now with the real at 5.5 to 1. It's a great jurisdiction. It's a very cost-effective jurisdiction to be mining in.
Thank you very much for that. We've got a question from the audience from Jacob Ambrose Wilson of Resource Global Network. And his question is, hi, Mark. Bearing in mind the social economic context of Brazil, particularly the local communities to the project, how are you approaching the project from an ESG point of view?
Obviously ESG has become a very important component and very much front and center of the investment community at this point. But I'll tell you, we have always implemented ESG. We have always had a very, very strong local and local perspective, we operate to the highest standards on an environmental standard. With respect to the working with our stakeholders, which would be the local community, the suppliers, they have always been our lead supporters. And that's extremely important. We provided them, no matter jurisdictions we've been in, with hospitals or schools or housing, we do that in a measured way. And the fact that we're not, so that they don't become dependent on the mine. But at the same point, no matter which jurisdiction we've been in, we have always been very strongly welcomed. We treat people with respect, and we understand that we are taking certain elements out of their community, being their mineral endowment, and in exchange for that, they should benefit as well. And so basically, I think if people treat people with mutual respect, if they operate to the highest global standards, then I think generally programs get to be built and built on time, et cetera. And I look at our Maracas project for Largo, and basically that is the only project that the BNDES, the Business Development Bank, has ever funded a greenfield project. And really that started by the fact that we had strong local support at the town level. That grew to the state level, and then that went to the federal level. So we've had ESG is extremely important. Treat people with respect. Enable them the spoils of war, and make everybody happy. Everyone should walk away, with a good feeling from any operation.
Thank you for that. Florian, what questions do you have for Mark?
I would be interested how easy or difficult it is to get qualified working staff right now in Brazil.
We have a team that we've been working with for the last 20 years. And so, but we've been growing it. I mean, basically we started in 2018 with a staff of probably half a dozen people. We're now probably closer to 30 people at our core site in Brazil. We're going into the development phase. It means we're going to have a lot more people to come on board. But we've never had any problems bringing on qualified people. In Maracas for Largo, we were in a jurisdiction that had very, very little mining anywhere near it. And so it was very difficult to get people to move from populous cities or areas to a brand new area of a population of 35,000 people, particularly for things like schools and keeping people entertained and happy that they're not in these geographic communities. But I'd say I think in terms of with regard to the Tocantins, you're not too far away from the major iron ore. You're about 800 miles away from the major iron ore industries, and we have it in Tocantins itself. It's one of the strongest agricultural states in Brazil. So we have a very good workforce, and one of the things that we are building, as we had in Honduras for Ascendant, is we're building a technical school, and we'll be bringing people through that technical school to bring into the mine.
Okay, great. And any short-term catalysts for over the next few months?
We've had a lot of catalysts. We've only been public for about 6 months now, or 7 months, and we've been public. We've been a company for 3 years. But I'd say that the next one is probably because of the quality of our project and the limited capital requirement to get us to our project, where the payback is less than 1.2 years. My expectation is that we've had a lot of interest from people to fund this project, even from a PEA level. So I think the next catalyst, Florian, will be, we are doing infill drilling now. We started the infill drilling program. We will have our feasibility study started in the first quarter. But I think the most significant component that I think people will see is probably the ease of finance that we can get for this project. And I'm hoping to show that we can do this in a very non-dilutive manner. Right now, we've got a total of 87 million shares fully diluted, and management owns 35–40% of that. So we're very, very cautious of dilution. But because, again, this is going to be the lowest cost producing mine in the world, based on Standard & Poor's Market IQ Intelligence, we are getting a lot of interest to fund this project. And I think, I hope by the end of the first quarter, you'll see that this project is funded and that shareholders aren't being diluted the heck out of.
Okay, thanks.
Thank you.
Thank you very much for that. I think we're just going to move on to our next presentation. Whilst I'm doing that, and got a quick polling question for you is, do you hold any iron ore stocks? So that should be hopefully coming up on the screen now. And whilst you're voting on that, I'm just going to briefly just introduce our next speaker, Cliff Hale-Sanders, CEO of Voyager Metals. Just before we get into your presentation, Cliff, an opening question: why did you change the name from Vanadium 1 to Voyager Metals?
Sure, I think that's really underscores the undervaluation opportunity that's in this stock. This asset, the Mont Sorcier asset, which is the core asset, was kind of brought back to the market in 2017 after having been kind of hidden away for about 45 years as the land package has been separated. And it came to market, and I think the Vanadium 1 name really had people focused only on the vanadium side of it and really missed the opportunity with what drives this project. And what drives this project is the iron ore component, and the vanadium will become a nice byproduct credit down the road to enhance this iron ore project relative to other iron ore projects as we move forward. So it is a unique opportunity. There's nothing special about the ability to extract vanadium from iron ore rich material. It's done around the world, primarily out of China, who produces 52% of the world's vanadium from mines just like this. So one of the reasons for the name change was to get the focus more back on the asset as opposed to just the vanadium, which is a very unique market for many people that they just don't understand. So with that, in 2020, we did complete a PEA, which is now historical, and we came out with a very robust NPV at that time of roughly 1.7 billion Canadian at iron ore prices that remain below the current level despite the pullback that we've seen. And that's because of the project itself and a lot of the components that I'll talk about going forward. And since then, I think we've only enhanced that by bringing on some key members of the team with significant experience in building and developing iron ore mines within the Canadian district. And I think moving forward, we'll continue to enhance that. So since then, we've upgraded the resource earlier in 2021. The resource now stands at in excess of 1 billion tons, grading roughly 31% magnetite, and room to grow that at depth. So the project is now globally significant in scale, and relative to the PEA, which was 5 million tons per year of annual concentrate production, this clearly could support a much larger and more robust mine as we go forward. Given the strength of that PEA and the scale of the resource, the team has moved directly to working to develop a bankable feasibility study, which we believe should be completed around the end of 22, Q1 23. We're currently 6 months into that program, finishing off the infill drilling effectively this week and waiting for the assays to continue to come out. I would point out it's iron ore. It's a very homogeneous ore body. It's about 200 meters thick. So when we drill it, we know we're in it, and nothing to date suggests any of our expectations in terms of upgrading this material to backstop a feasibility study will change. We've already had significant interest in the project. We've signed an offtake agreement with Glencore for obviously the iron ore component, but Glencore is also one of the world's leaders, if not the leader, in vanadium trading. And just as a little bit of an aside, Mark is executive chairman of Voyager as well, and at Largo Resources, Glencore was a large component of bringing that project to fruition as well with their offtake agreement for the vanadium. We've also signed an MOU with the Port of Saguenay, which is our preferred concentrate export destination, and we'll talk about the infrastructure in a moment. But again, we're seeing lots of regional support to continue bringing this project forward. But what really is going to drive this iron ore project versus other iron ore projects is the product quality itself. We are targeting to produce in excess of 65% grade iron ore with 0.6% V2O5. And going forward, the push to higher grade iron ore material around the world for the decarbonization and the environmental benefits from that is extremely high. A lot of the material in Australia and in Brazil, it's still well below 58%. So as we move forward, the ability to deliver into that higher grade market and help the decarbonization of the steel business is going to be key. And we're going to continue to expect a premium being demanded in the market for this 65% grade material, which right now runs at about a 20% premium to the more standard 62% index. But this is going to be a big driver for this project itself. Obviously, the benefit of the V2O5 as a byproduct will enhance the revenue stream. In the PEA, it was about 86% iron and 14% vanadium. At current prices, it's a little bit more on the iron side. But what really also enhances this project is its physical location and our ability to leverage off existing infrastructure, which means we can have a rapid development timeline. Currently, we're located just outside of the town of Chibougamau. There's 300 kilometers of underutilized railway from Chibougamau to the port of Saguenay in place, available today, does not have to be built. We are 25 kilometers from the main public road systems. We actually have logging roads in our areas that are year-round, so great access. We're also connected to low-cost Quebec-based hydropower, and this is a significant reason why you see Rio Tinto's aluminum facilities in the area. We're probably going to be spending about 4 cents a kilowatt hour, and given that we'll be using magnetic separation, power will be our considerable part of our cost. But that being said, again, with the high-grade material, access to hydropower, from an iron ore perspective, this is probably as green as you can get. We have obviously the access to the port of Saguenay itself, very, very underutilized. These are old logging area. The logging business is just not what it used to be in this area. So again, lots of spare capacity, lots of push to drive more business in this area. And recently we've seen both provincial and federal governments commit $66 million to the port for further upgrading. So we expect that to continue going forward. And I'll just kind of go to the next slide. This is our very aggressive but doable timeline to get into production. Assuming everything goes as planned, and nothing to date suggests anything differently, we believe by late 25, early 26, because of those benefits of having all that infrastructure in place, a very straightforward, very robust, and very simple mining operation, we could be in production in a relatively short order going forward. We're in an area that is very mining friendly, has a lot of history in the mining sector, and has seen numerous projects in the area permitted in the recent past. So with that, I'll wrap it up and open it up for questions.
Thank you very much for that. I'd probably like to go to Peter first. And I guess a question for you, Peter, what are your views on iron ore? I'm interested in Kenosis are involved in any iron ore projects. And then obviously the follow-up is like, what questions do you have for Cliff?
Yeah, so thank you, Cliff. Very interesting. I suspect the most likely buyer for the product is China, correct?
Not necessarily. There are facilities in Europe and the Mideast who have already installed the vanadium recovery circuits next to their blast furnace. Clearly, a US buyer could invest in a vanadium recovery circuit and extract the vanadium. It's a relatively straightforward process. You tap off the slag in the blast furnace, and then you reprocess the slag. So that it's a question of whether one wants to commit that extra investment.
Right. I was just trying to think that if China was the one of the principal buyers, how would you compare a potential landed cost of your product to a competitor nearby, say if someone in Australia or the likes of a Fortescue or something?
Obviously, the actual shipping cost is going to be more expensive than someone in Australia. And you probably know that Champion Iron Ore also has an offtake agreement with Glencore, and they ship that material. You have the IOC operations in Canada. And these all effectively are going to China directly. So we'll be in line with the other operations in Canada.
Gotcha. Very interesting project. Thank you.
Peter, are you involved in any iron ore projects currently, or?
Not currently. It's a long lead time, a lot of capital. So we would tread lightly looking at iron ore. We've done things in past lives, but we haven't done anything in the last few years.
I'll just jump in there, Peter, just on that, on the capital side, because of that 300 kilometers of railway and the port already being there, I would suggest relative to an Australian developer who has to build 600K of railway or the massive Simandou project in Guinea, we're probably saving $1.5, if not more, $1 billion relative to these other projects in upfront capital. And we believe this mine, because it's near surface, essentially less than 1-to-1 strip, CapEx will probably be in somewhere around the 500 million US range.
Yeah, that's awesome. And you're great, obviously. So I mean, it's very exciting.
A question for myself, Cliff. I mean, obviously, your presentation was more of a summary about obviously where Voyager metals are at. But just out of curiosity, what are the sort of the supply-demand fundamentals like for iron ore at the moment, and I guess over the course of the next 5 to 10 years?
Well, I think everyone, is focusing on the short-term pullback. We've seen in iron ore prices this year coming down from, a highs of north of $200 a ton, now back into the sort of $85 to $90 range for the 62% grade material, which is the more well-known index in the market. And that was, to me, a very well telegraphed decline when China essentially said we're going to stop producing as much steel. Very much expected. They're pushing against Australia. There's a lot of political drivers. But when I look out to the future in the iron ore market, this is where it does get interesting. The iron ore concentrate market is a roughly 2 billion ton per year market. So to continue to grow at even a modest level of growth, call it 1 or 2%, you need significant new supply coming on stream every year. And that is where things very quickly fall down in terms of where that supply is coming from. When you look at the biggest potential new source of supply was the giant Simandou operations in Guinea, which has recently just had a coup. Capital requirements there are now probably pushing 20+ billion to bring those mines to fruition. And they were the only large scale mines. So I'm sure Rio and Vale and Fortescue have a little bit of slack capacity, but do we see them committing to any new major investments at this point in time? The answer is no, because they don't also have access to the high grade material. So as the push is more towards mines that can deliver 65% or better, you're going to see a shift in focus on what mines can be developed going forward.
Florian, what questions do you have for Cliff?
Well, I would be interested how much cash currently is available, and how much is the company tight in regards to the agreement with Glencore?
Well, as part of it, obviously we're going quite quickly here. Glencore is committed not only for the offtake, but what we call a financial assistance agreement. So they're going to help us source approximately $10 million US, which we believe is more than sufficient to deliver the Bagwell feasibility study. So that's going on in the background. Currently we're well cashed up at this point in time to deliver on the completion of the drill program and the resource update and continue on. So we're in a very comfortable position on the funding front.
Okay, thanks.
Thank you very much for that. I think we have it. I think what we should just do in the interest of time is perhaps move on to Mark Brennan for our next update. Ascendant Resources is a Toronto-based mining company based on the exploration and development of the highly prospective Lagoa Salgada VMS project, located on the prolific Iberian Pyrite Belt in Portugal. And I think, Mark, you've got your slides up now, so perhaps I should hand the floor over to you to go and give us an update on Ascendant Resources.
Thank you, Andrew. Again, with regard to Ascendant, this is a project that we bought into the Lagoa Salgada project in mid 2018 because we saw a world-class potential project here that basically could compete with any of the projects on the Iberian Pyrite Belt. The Iberian Pyrite Belt is the largest producer of volcanogenic massive sulfide deposits. And basically, if you look at the characteristics of the different deposits on the belt, we see a direct correlation to Matsa's Aguatinitas project, which was recently sold to Sandfire of Australia for 1.8 billion. In terms of the most significant component here being that we've got a very high-grade VMS deposit that is just above a significant deposit of copper stockwork. And that was the characteristics of Aguatinitas, which in turn leads to a very strong economic picture where we're producing material, where we're driving revenue of about $137 per ton at a cost of about $52 to produce. I'd stress that this project is still very much a discovery project in the discovery stage, where we've done very, very limited drilling to bring out a 27 million ton resource. And the reality is that I believe that just in one area that we're focused on now, that the tonnage will increase to about 150 million tons. But just like we've done in Brazil, what we're focusing on for Cerrado, what we're doing here is we're driving a parallel path. One is on the exploration side to grow the resource significantly and make this a world-class project, and hopefully the most significant project on the Iberian Pyrite Belt. But on top of that, we're also looking at a development project with low capital cost, 132 million, for a 14-year project that in the first 5 years alone will generate 80 million of free cash a year. So the payback is here about 1.5 years. And we see significant potential to grow the NPV and to grow the IRR by adding to the resources, and particularly on the BMS side. So what we're looking at here is a project that we're doing. We started infill drilling on Monday. We're now moving to complete that by the end of the first quarter. We're doing a feasibility study starting in January. We hope to have that PA study completed by the end of next year. And then we hope to be in construction by the third quarter of 2023. So that's a very rapid timeline, low capital cost. And just like with Cerrado, our intention here is to look at funding this operation with as limited dilution as we possibly can. I think it has great, great potential on the exploration side, and on the development side. Again, we have the team that can build this project, and the team that can drive this thing bigger and better. So it's kind of like a phase one, similar to what we saw in Brazil for Cerrado, where we've got a phase one, but I think that phase two will come into play very quickly, possibly even before we go into production, further enhancing the economics that we're showing here. I'll keep it very brief and very happy to answer any questions further. But I believe that this project, will ultimately show itself to be one of the best projects on the Iberian Pyrite Belt, with very, very strong economics.
Okay, thank you very much for that. Perhaps I can. Oh, have you got one more slide, or shall I throw it open to questions?
No, sorry, I was just going back to that to leave it at. Go ahead.
Okay. Perhaps I can bring in Florian this time first. What are your thoughts on the project, and what questions do you have for Mark?
It's certainly interesting. I have to be honest, I'm not a specialist when it comes to mining in Portugal, so maybe you can give me a little bit more of a background there. I mean, generally, I'm a bit European Union skeptic these days, and I'm not sure how you will manage in these countries, or especially in Portugal here, with ESG down the road and the permitting and everything.
Thank you. Well, we started our environmental EIS, the environmental impact study in April of this year. In Portugal, there's a 2-year process by which we should complete that by the second quarter of 2023. Between now and then, we'll complete our feasibility study by the end of next year, and then from there, we anticipate having the approval of permitting by the second to third quarter of 23, and then we're looking for production. Construction to start off in Q3 of 23. So the reality is that, again, just like anywhere, we have the very, very strong support of the local community. Our partner is actually the EDM, which is the Portuguese government. And the fact is that they want to see this project into production. We were surrounded by 2 mines nearby, Neves Corvo, owned by Lundin, and then the Aljustrel mine, owned by Almina, which is a private company. And they're each about 45 minutes away. And the disparity of wealth that the people in the town of Grandola, which is where we are located, basically compared to Neves Corvo or Aljustrel, is significant. So the mayor of Grandola in particular has driven this to the federal government. The EDM is our partner. We just signed a concession contract on last Monday that we announced. And basically, I believe ultimately this project will become a project of national interest, and which will mean that we'll have expedited regulatory approvals and government attention. And that is largely because we have the strong support of the community. And again, we will be enacting first-class principles in terms of quality of work and provisions and safety that we enact in all the companies we work with.
Okay.
The nice thing is that there's already very good infrastructure in place, and so we don't need to build a lot of ancillary roads or anything like that. The infrastructure is there, and actually, the EU are currently providing development capital to mining companies on the IBP. In our development plans, we have yet to build in any incentives or any benefits from the European Union, but I think those will come as they are at Neves Corvo right now and Aljustrel. So we're cautious, but again, at the end of the day, Florian, I think it's as long as you're respectful for your community and those your stakeholders, I think you can get a lot done.
Mm-hmm. All right. Thanks.
Can you tell us about your company's technical expertise? I think I saw in a recent press release you recently appointed Clinton Swemmer as Vice President for Technical Services.
Yeah, certainly. So, but first of all, the project has been led by João Barros out of Lisbon, out of Portugal. Basically, his father is a mining professor and runs a company that's involved in the regulatory approvals and such. His brother runs the largest mining, the drilling company in Portugal. He's a geologist. He's a engineer. So in-house, currently we've got a very strong individual who's leading this process. We're working with IGAN and Quadrante, which are the two top mining engineering firms on the Iberian Pyrite Belt. And now you mentioned we brought in Clinton Swemmer. Clinton is in our view very, very strong. One of the strongest individuals that we know of in terms of technical services and the capability to assist us in developing not only this project, but other projects. He's had a long experience with significant mining operations companies and consulting, engineering companies over his storied career. So we're thrilled to have Clinton, and this is kind of a step-by-step process as we move into the construction process and the feasibility process. We'll be adding more and more to our team. But to Florian's question earlier on Brazil, in Portugal, we have mines surrounding us. The Iberian Pyrite Belt is only about 200 kilometers. So from that perspective, readily access to the labor pool. And probably the most significant individual we have outside of João and Clinton currently is a fellow called Carlos Setas Pires. And he was actually the lead metallurgist at Neves Corvo and then Almina, whose mines have much more complicated ore than we have. And he joined us last October as a consultant to come in and really help us with our metallurgy. And he's been phenomenal. So we've got a really strong core group of guys that we can build from.
Mm-hmm. Peter, what questions do you have for Mark?
I had two questions, but I think Mark answered one of them. It's a well-known region, the IPB, but is there labor shortages and is it difficult to get guys? But I think he answered that. And then Mark, maybe it's an unfair question because you presented for both, but I think it maybe begs the question of folks, management bandwidth. You obviously have two competent management teams in both firms, but I think it'd be good to hear that.
Yeah, just so you're aware, I mean, I guess with regard to Cerrado, I am the CEO, and the fact is, that is my, that is where I was intended to spend most of my time. We had some management changes at Ascendant in May, and the reality is that we will bring in. I'm the executive chairman and interim CEO. But as we move through the development phase, we will be bringing in, if not elevating our existing team to bring someone into the position of the CEO role, where we'll need to have somebody on a full-time capacity. But at the same point, right now we're going through a process where really it's drill driven, it's engineering driven, and not so much orientated towards requiring somebody full time. Although we are looking and we'd like to bring someone in as soon as possible.
So is it a pretty good bet you speak Portuguese?
I've spent. I don't know. It depends who you ask. I try.
Well, many thanks for that. I think that was a really, really great sort of presentation. One thing that I should just mention, and perhaps we can just bring up a slide just to go and advertise, is that Cerrado Gold, Ascendant Resources and Voyager Metals will all be at our upcoming Mines and Money London event that takes place 1st to 2nd of December. If you haven't already registered, it's still there's still plenty of time to go and register and to go and secure your place. It's going to be a great event. We've got 1,000 people attending in person, our first in-person event for 2 years. So I actually can't wait to go and see you all there. That brings us to the end of today's show. So once again, I'd like to go and thank our guests, and just to briefly thank our guests again. They were Florian Grummes from Midas Consulting, Peter O'Malley from Kenosis Capital, and then also Mark Brennan from Cerrado Gold and Ascendant Resources, and Cliff Hale-Sanders from Voyager Metals. And I'd also like to thank our media partner, Resource Global Network. See you next time. Until then, stay safe. Thank you very much.
Thank you very much. Thank you all.
Thank you.